Hey everybody, this is Trevor with Market Delta. I want to take a quick look at the soybean market and show this opening gap and this run and analyze what this looked like on the footprint, how you might have traded it. So obviously we gapped up from around the 60, 64 level. It opened up about 10 cents higher and then rallied like another 15 or 20 cents. So let's break this down on a footprint. Notice then it continued higher, it would set back and continue higher. So with that in mind, let's take a look at what the footprint looked like. All right, so here's the footprint, and let's scroll back to that open. And I've got this on a 5-minute chart. This is a 5-minute chart, so you can see basically the same picture. So this is where the market opened, where it gapped open. And you can see right from the get-go, this is a volume imbalance footprint. You could see right from the get-go the buyers were here. And I'm not talking just in terms of the price direction, but I'm talking in what we see on the volume imbalance. You can see the green. That simply represents that the order flow is positive. It's up. They're buying it still even after the gap higher. And at that point, you've got to just go with the momentum. But the question is, we know it can't go inevitably on forever, so we were looking for a point to either get short or take profits. And this bar here closed, opened, and immediately continued higher. But here's what we want to look at right up in here. Notice the top of this bar. Momentum was weakening significantly here, and we had no continuation on this bar. So we see no buy volume imbalance here, no greens up in here. And we don't see any reds either. So they didn't come in and start hitting it real hard up here, but you can see that basically the momentum weakened as it probed higher here. And really what confirmed it was this bar. The next bar opened with sellers. So while we saw a similar pattern here, it opened up with buying right through the highs. This one opened up, it had pulled back, it opened here, and then the selling entered. So notice this bar closed here, opened, immediately traded higher with buy momentum. This bar closed here, opened here, well off the high, 3 cents, 4 cents off the high, and sellers entered. Okay, so that's the first thing I wanted to show. The next thing was, let's scroll over here. This market really started to build like a triangle here. You can see it. It really was just coiling. I like to call this a coil. This market just was dying out. Notice there's almost no price volatility. It's just tightening up. And a lot of times I like to see the volume imbalance be positive. I'm sorry, the volume breakdown here. I like to see it be positive in this coil, expecting prices to continue higher. Here it was slightly negative, but the expectation is for higher prices. The market had rallied. It's coiling. The expectation was higher, and that is what obviously ended up happening. But how do we take advantage of that? So as the market coils, you know there's energy that's being contained, and that energy will come out one way or the other, whether on a breakdown or break up. And what we saw here when it first came out of this tight range, we did see the volume imbalance. We saw consecutive positive volume breakdown, and off it went. So the reference point here would be around 87.5, and you can see it took out those 87 halves, which would be right in here. And finally, we get a nice top that we like to see, where we get some selling right up near the highs. Love to see that on a reversal pattern. And then we saw the volume breakdown pull back from a high. So anyway, that was a couple ways to take advantage of this move up. One was on the momentum on the initial gap open. The next was coming out of this tight range. and then these reversals, because ultimately there's got to be an area where you take profits and possibly play the short side. And that was a great example of this in the grain market. Now, if I scroll ahead, you could see at the end of the day they had another run back up to those highs. You could see what that looked like. And that was in the last few minutes of trade. So if you trade these markets, if you trade these agricultural markets, you know that the opens and closes oftentimes have a lot of movement, and you can use this information, this intra-bar information, to help position yourself accordingly. One last thing I want to point out, this is where it had coiled and then rallied up. Notice where it pulled back to. Pulled right back to where it had broke out, where it had coiled, where all that volume and this initiation point. Also note how it was the high volume print of the day. Really pulled back to that POC, and you can watch as I scroll ahead, you can see it just kept testing it. The fact that it couldn't break down through there should give you a clue for that potential continuation higher, because it just could not break down through this. So anyway, some great insight here and opportunities for using the footprint.